Sei Network is making moves that should be generating massive attention, yet somehow flying completely under the radar. Let's talk about who's building here, because these aren't speculative decentralized finance protocols. These are institutions managing trillions in assets. Apollo Global Management, one of the world's largest alternative investment firms with over $650 billion in assets, is integrating with Sei. Robinhood, the platform that brought millions into crypto trading, is building infrastructure on this network. Blackrock's Kaiko, their institutional-grade market data provider, just announced Sei integration. These aren't marketing partnerships. These are technical integrations for real-world asset settlement and on-chain finance infrastructure. Think about what that signals. Institutions don't waste development resources on chains they don't believe will scale. They don't integrate settlement layers unless speed, finality, and reliability are proven. Sei is positioning itself as the infrastructure layer for tokenized assets where transactions need to settle fast without sacrificing security or transparency. Yet when you pull up the SEI chart, you'd never guess any of this momentum exists. The price is trading like a forgotten altcoin, not a network attracting Fortune 500 attention. CryptoBusy highlighted this exact disconnect. Strong fundamentals, weak price action, and historically, that divergence doesn't persist indefinitely. Eventually price catches up to fundamentals, or fundamentals deteriorate to justify the price. Sei's fundamentals are accelerating, which means price is the variable under pressure. This is the setup institutional confidence building quietly, while retail remains disengaged. The question isn't whether Sei has legitimacy, that's already established. The question is when the chart starts reflecting what's happening behind the scenes. Now, let's examine the technical structure, because this is where timing precision enters the equation. Sei has been trapped inside a falling wedge pattern for months, a formation that represents gradual compression as buyers step in earlier on each dip, while sellers push lower highs with decreasing conviction. Currently, SEI is hovering near the lower boundary of this wedge, around the 19-cent level. This isn't random support. It's been tested multiple times throughout this pattern, and each time buyers have defended it. That's significant. It means there's consistent demand absorbing selling pressure at this level, creating a floor that's holding despite broader market weakness. So, falling wedges are continuation patterns that typically resolve upward, especially when volume diminishes during the compression phase, which is exactly what we're seeing here. The narrowing range between support and resistance creates this coiled energy. Price can't compress indefinitely. Something has to give, and the wedge structure suggests, the path of least resistance is upward once that critical resistance zone breaks. But here's the risk management reality: patterns mean nothing until they confirm. As long as price remains inside the wedge, we're still in compression mode. Losing that lower trend line would invalidate the setup entirely, and likely trigger another leg down, putting sellers back in control, and, honestly, delaying any meaningful recovery. That's why the next move from current levels matters so much. It either confirms the pattern or destroys it. The technical setup is clear. Sei is coiling its support inside a bullish pattern, with institutional fundamentals accelerating in the background. The compression phase is reaching its conclusion. Now we need to identify the exact zone where this resolves. Before we break down the exact breakout zone and price targets, and trust me, this is where it gets tactical, hit that like button right now if this analysis is connecting dots you hadn't seen before. Seriously, it takes 2 seconds and it tells YouTube to push this content to more traders who need to see it. And if you're not subscribed yet, subscribe and turn on notifications so you never miss these setups. We're building a community that spots divergences before they resolve. Now, let's talk about that critical resistance zone. CryptoBusy identified the zone that determines everything, 26 cents to 30 cents. This isn't arbitrary. It's where multiple resistance levels converge, creating a ceiling that's rejected price repeatedly during this compression phase. A confirmed break above 30 cents would signal the end of the falling wedge pattern and mark a major shift in momentum. That would indicate buyers have absorbed all available selling pressure and are prepared to drive a sustained recovery move. So, it's not just about crossing that level, it's about actually holding above it and, establishing it as new support. That's when conviction really builds and larger capital starts entering position. If that breakout confirms, the first logical target sits around 40 cents. That level, honestly, represents the last area of heavy trading volume before the major downturn, making it a natural magnet for price once bullish momentum establishes. It's where profit-taking from earlier holders will likely emerge, creating some temporary resistance before potentially continuing higher. Okay, so here's the mathematical perspective. A move from current levels around 19 cents to 40 cents represents roughly 110% upside. That's not a moonshot prediction, it's really just a measured move to the nearest significant resistance, based on previous price structure. If, momentum accelerates beyond 40 cents, the next targets would be 55 cents and potentially 70 cents, but those depend entirely on sustained volume and broader market conditions supporting altcoin strength. The setup is asymmetric. Risk is defined by the lower wedge boundary around 17 to 18 cents. Reward potential extends to 40 cents initially, with expansion targets beyond that if confirmation is, decisive. That's better than 2-to-1 risk reward, and honestly, it's backed by both technical pattern validity and accelerating fundamental development. What makes this particularly compelling is the catalyst alignment. Falling wedges often break on specific triggers, exchange listings, partnership announcements, major protocol upgrades, or, broader market momentum shifts. Sei has multiple potential catalysts on the horizon. The institutional integrations we discussed aren't complete, they're ongoing. Each new announcement from Apollo, Robinhood, Blackrock's ecosystem, or additional enterprise players strengthens the fundamental thesis and provides news flow that can spark technical breakout. Real-world asset tokenization is accelerating, and Sei is positioning itself as critical infrastructure for that transition. Additionally, altcoin season dynamics matter here. When Bitcoin stabilizes and dominance starts declining, capital rotates into quality layer 1 and infrastructure plays. Sei fits that profile perfectly. Proven technology, institutional backing, and a compressed chart ready to expand. If broader altcoin momentum builds, Sei becomes a leveraged play on that rotation. The Divergence CryptoBusy highlighted is reaching its resolution point. Price has compressed for months while fundamentals strengthened. That tension is unsustainable. Either institutions lose confidence and stop building, which seems unlikely given recent announcements, or price starts reflecting the value being created. The latter scenario is significantly more probable. If this breakdown just shifted your perspective on Sei, do two things immediately. Subscribe to this channel so you catch the breakout confirmation video when it happens, and drop a comment telling me whether you think SEI breaks 30 cents before year end. Are you already positioned? Watching for confirmation? Skeptical about institutional impact? Comment below. I read every response, and your insights help shape future content. Listen, I appreciate you watching until the end. Most traders chase what's already pumped and wonder why they're always late. You stayed for the setup analysis, which means you're positioning before momentum, not chasing after it. That's how asymmetric opportunities get captured in this market. Before you go, I've got another video breaking down 3 layer 1 blockchains with similar institutional backing trading under 50 cents. If Sei's technical setup intrigued you, those opportunities will absolutely interest you. Link is in the description and on your screen right now. Remember, in crypto, the biggest moves happen when fundamentals diverge from price action. SEI is showing that divergence right now. The falling wedge is compressing, the resistance zone is clear, the targets are defined. Now we wait for confirmation, and when it comes, the move could be explosive. This is TJ from TJ Crypto World. Stay patient, stay tactical, and I'll see you in the next breakdown.